I'm not going to get into the nuts and bolts of supply and demand as it relates to the PGM. I want to take more of a bit of a philosophical view of the market. Our view has been consistent. We recognize the issues of the day, but the underpin to PGMs remain very solid and very positive. And let me share with you why. The graph on the right-hand side indicates the makeup of light vehicle production by powertrains. On the left-hand scale is millions of units of light vehicle production. And you can see the different colors indicate what is ICE, what is hybrids, what is BEVs, and fuel cells are hardly seen in this period. The point that needs to be made is the following, is that absolute light-duty vehicle production is forecast to grow over the rest of this decade to well in excess of 100 million units per annum. I think the second point is that electric powertrains are expected to increase in market share in coming years. Now, that does mean that battery electric vehicles will increase in market share. But for some time, we've been saying those penetration rates are overstated. But what seems to be forgotten is the role that hybrids will play, and what's becoming much clearer to us as we get to understand supply constraints, consumer preferences, and technology advances. The use of PGMs in the hybrid and internal combustion engine segment of the market is well supported. More recently, you had GM, Ford, Toyota, BMW, and in fact, about a week, 10 days ago, Mercedes have all made public announcements pulling back on battery electric vehicle plans. And that type of messaging drives sentiment. Sentiment impacts short positions in the market. And from a palladium point of view, you're starting to see that unraveling. The point of all this is that those technologies that use autocats, and that's ICE engines in the purest form, and plug-in hybrids, in this decade are expected to provide approximately 70% of the powertrain mix, which is a very solid underpin to the PGMs. I think it's clear and it's well understood that the majority of PGMs, especially platinum, ruthenium, and iridium, have significant industrial underpin as well. In other words, they're not really impacted by what happens in the auto segment. So again, another underpin to the demand side of PGMs. We do expect primary supply cuts from loss-making production. We've cut back 40, 50,000 ounces on shafts that have come to the end of their lives, on some loss-making production. And I expect other companies will do exactly the same. So-called recycling and extrapolating recycling of autocats in straight lines is not going to happen. Recycling remains subdued for very good reasons. There's very little price incentive to collectors. Logistics are difficult at the moment. People are not scrapping cars. The steel price is not underpinning the scrapping of cars either. So where we've ended up is in a bit of a volatile situation where supply chains have created major disruptions for end users who, through the experience of COVID and the Ukraine invasion, have stocked up and built up inventory. And what we're seeing in the depressed environment at the moment is that inventory is being reduced, and there is destocking taking place. That's what depressing the price. None of the fundamentals have been impacted negatively. And of course, inventory is finite, and we are already seeing a little bit more activity in the spot market from end users. So we remain positive and constructive regarding the PGM markets. Now, this is some company information coupled with, of course, forecasts of others from a base data point of view. But it's not, it's very difficult to look at platinum and palladium as separate metals. And we initiated the substitution of palladium with platinum for very good reasons, and we'll get to more of that later. But the graph that you see here indicates a base case market balance in red. It indicates through the gold bars our view as a company of lower BEV growth. And of course, you can see in terms of platinum and palladium looked at from a 2E perspective, the deficits increase from the base case just through that out into 2028. And when you look at supply rationalization and you develop what we call a combined scenario of both lower BEV growth and supply rationalization, you can see why we remain constructive and bullish regarding these two metals, with deficits all the way out, in our view, to 2030. In terms of rhodium, it's also not too different. When you factor in our view of lower BEV growth, which we've maintained for some time, when you look at supply rationalization, and yes, we're very mindful of the changes occurring in the fiberglass industry in China, you can see again from a combined scenario point of view, rhodium only moves into a surplus in 2030. All of this bodes very well for the underpin to our PGM business. In addition to that, we have, as a company, been driving what we believe is innovative market development. Now, I referred to the tri-metal catalyst work that we did with BASF in 2020. We felt that the palladium demand had entered a phase where it was not sustainable in terms of the way we are mining. We looked at the international basket weighting and recognized that it was important to look at the potential substitution of palladium with platinum. Now, today we received many comments that you've actually undermined your own business. That's not true, because the reverse is also true. As platinum will increase in price, that provides the underpin at a logical point in time for palladium to be substituted for platinum. And therefore, we are very confident that we've done the right thing from a sustainability point of view to ensure that our baskets are balanced. In addition to that, we've more recently embarked with Heraeus Precious Metals on two projects. The one is a ruthenium-based catalyst for PEM electrolysis. And again, that is to ensure that there are cheaper options for producing hydrogen and not having to revert to scarce iridium. The other one is we are exploring new applications for palladium in the hydrogen economy. So palladium has had, in our view, very little market development investment, and we are following through on that.